Go.
Good afternoon. This is Urrutia of Revitalize Investment. Today, we're going to talk about the real estate and the marketplace and some of the trends out there. When you look back about 2014, 2013, a lot of REOs were out there. You're getting good deals on because there's plenty in the marketplace. And today, there's still plenty. The challenge is that a lot of the hedge funds, private equity firms, some of the large groups we're familiar with have bought a lot of property. Now they're starting to sell some of it, and they're profiting, which is their business. That's what they did it for. So the challenge is, look at the hot states like Florida, Arizona, Texas, California, Colorado, New York. It's really challenging to get 50, 60 cents in the dollar. And everybody's expectations in the marketplace, you can still get that. Now, I'm not saying you can't. There's ways of getting that. You can go through probate, you can go to bankruptcy, you can go to the sheriff's sale, you can go through divorce court. All those individual places in a market of their own, you can get good discounts, but you're doing one at a time, and you got to wait a period of time. Sometimes a probate takes a year. Sometimes foreclosure short sales take a year, year and a half, depending on what state it is. And when you look at divorce, number one, they're getting divorced for a reason, because they don't get along, and two, trying to get them to agree on a sales price is overwhelming, and then you're still fighting that battle. In bankruptcy, sometimes they'll sell the properties because they have to liquidate everything, but even then, you got to wait. So my point is, if you look at REOs, Revitalize Investment has that REOs. But if you look at the Midwest and the Southeast, you can still get decent deals, maybe 50, 60, 70 cents on the dollar, but you're not going to get the 50, 60 that everybody's looking for in bulk. Even if right now, if I were to buy $50 million worth of properties, I'll be lucky to get 60, 65 cents on the dollar. And that's buying a large bulk. $50 million gives you somewhere in the neighborhood of 600, 700 properties. And that's still a high price to pay, but there's still good margins, still good properties, and there's still a model out there that says if I don't buy, fix, and flip, to buy and hold. And that's a trend right now. So if you look at non-performing notes, they're coming back. They were out of favor for last year, now they're back again. If you look at the buy and hold, rents are going higher, and that's what a lot of investors are doing today. With Revitalize, one of the things we have is we have short-term money, and we also have longer-term money, and that will take you out to 2 years, 10 years, 12 years, 30 years if needed. So one of the reasons, and we talked about earlier about $89 a month, we have all this flexibility that we bring to the marketplace. There's not too many people out there that will do that. They don't bring the right tools to the table. They don't bring the educational piece. They don't bring all the various ancillary services like title work and appraisals and different types of lenders that fit different models. So we're not bringing it to a table and say, here, make your choice and have them fight over you, because the reality is all hedge funds and private equity funds have a model they have to follow. So if they give it to you for 12% and 4 points, they give it to everybody for 12% and 4 points. And they might have to check credit, they might have cross-collateralization, they might have to have personal guarantees. With our model, anything under $100,000 is asset-based. Anything over that, we have a couple relationships that would do up to $750,000 on a BPO. Yes, there's some qualifiers in there, some criteria that's expected. If you go to $1 million, $2 million, a longer process. What we're trying to do is get things closed within 5 days. And we believe with the relationships we have right now, we can. So I'm going to close this, is that one, you might have to change your model as an investor to adapt to a buy and hold. And rents are really going high. The other side of this is that when you look at the long term, we look at 2020, 2021, 2022, the properties themselves will be appreciating, but you're going to see a leveling probably 2019, 2020 starting out. It has to go flatten out for a bit and it'll pick up again. It's just a trend. We've been 10 years from the time we failed in the mortgage industry. Now we've been trending upwards since 2013, 2014. Takes us into 2020, 2021. We got a new presidential election coming. We have a new administration. Either one that stays or that we change. And whatever laws they put into place, it's going to take 2 to 3 years, 5 years to take effect. So my point is this: whatever's out there right now, you got to gobble up. We know there's a lot of notes out there. There's more notes coming, and there's more foreclosures coming. And the market, based on what was being told, isn't always the truth. So just do your research, understand the marketplace, and join Rev. Come, we'll help you grow, and we'll be with you forever. Thank you.